Please show me the way, baby, to your heart. Please show me the way.
Hello, what's up guys? It's Jeffrey Benson right here. Today I'm going to be showing you a simple Forex trading strategy which I personally use, and this is the same strategy that I used in passing FTMO challenge verification, and also I'm using as a funded FTMO trader. This strategy is so basic. So I've written out all the rules, the entry strategy, the money management, the risk management, and even the psychology in my trading journal, which I'm going to be showing you. All right, so I'm going to be going step by step in showing you the entry rules and how I do all of that. Then after that, I'm going to be taking you to my computer screen to explain how I make my entries, the conditions I see before jumping in. So this video is actually very okay for beginners and for those who are already successful at trading, just to have a fair share of how I trade and how I look at the market in general. So if you are seeing this video for the first time and you like what we do right here is to share and inspire traders all over the world, make sure you hit that subscribe button and turn on post notification, hit the like button too as well. When you are doing that, with hitting the like button, you're helping us to share this video to as many other persons who would actually find value in all of our videos. All right, thank you guys for sticking around. I really appreciate you for coming back, for those who are returning to this channel. Just to clarify, whatever strategy today I'm going to be showing you today, this is my own personal approach to the Forex market. You may be doing it differently and you may be doing it in a very separate way. You may be using the tools I'm not using. That does not mean that you're not going to be successful, or you may not be approaching the way I'm approaching. That doesn't mean you're not going to be successful. All right, it's just my own way of doing it. So if you find value in it, you can just pick a thing or two that you could just add to yours and just make yours unique. All right, as long as you're making money with whatever you're doing, trust me, just stick with it. All right, and another thing is to say no strategy is a holy grail. What make a perfect strategy is your money management, your trade management, and having a trade plan. Having a plan. If X and Y happen, I'm gonna do Z. If A, B happen, I'm gonna do C. That is trade plan. So that's the reason why I'm gonna be taking you straight to my trading journal. How I have my trade plan set out, what my entry strategy is, what my risk management strategy is, what my money management strategy is, and also what my psychology is. If I have a losing trade, how do I behave, how do I react, and what is termed failure for me and what is time winning trade for me. For example, it is not failure when I stick to my own trading plan and I still lose. To me, it's not failure, it's still a success, because I know strategy definitely fails sometimes. As long as I stick to the rules, I trade it the way my plan asks me to play it, that's a win for me. All right, so that's just some psychological stuff that you have to put into your mind. And again, you have to have zero emotion. You have to have zero emotion attached to trade. How do you do that? By looking at your trades in terms of percentage and not looking at it in terms of X amount of money that's being lost. All right. Okay, so, and just to let you know, I only trade one pair, which is GBP USD for now. For a very long while, I've been doing it for 3 years consistently. I've only been trading just two pairs, which is Euro USD and GBP USD. But for a year now, I've been trading just GBP USD, and that is what I've been using to flip accounts, and it's working for me. I use it to pass my FTMO challenge verification, and also I'm also using on my FTMO foreign accounts. So that's what I've just been using. So that does not mean, remember, that does not mean you that you have trading a lot of pairs that you are doing it the wrong way. No, it doesn't suggest any way, but that's just my own personal approach. All right, so let's get in straight to the trading journal. So I'm going to be showing you the entry strategies first. So you can see, number one thing that you see right here on the screen that I use as my entry strategy is trend line. I'll just give you a breakdown of these things, that the tools I use. Trend line, I use psychological levels, I use high and low of the week, and I also use my main trend line from 4 hours. So I'm going to be showing you straight ahead to my entry strategies, what I do. This is exact things that I do when I wake up early Monday morning. This is what I do repeatedly. So the first thing that I do here is I come to my GBP USD, because that's the trade I trade, of course, you know, that's the only pair that I trade. So I'm going to come to my H4 4 hours time frame. What I want to do first, like for last week, it started this way. So you want to put this period separator. How I did that on my MetaTrader 4 is to press Ctrl Y. You just press Ctrl Y, it will come up, or you could just go to settings and toggle on your period separator. So already I have it this way. So what I'm looking at for, I want the first two formed candle on my 4 hour. Remember, you have to come to 4 hour on GBP USD. First two candles to form, I have to note the high and the low. So these are the first two candles. Here is the first one, here is the second one, right? So I'm just going to take a horizontal line and I'm going to place it the highest from the two of them. What was the highest point they ever got to? This was the highest point these two ever got to. Then I'll take another one again to know the lowest they ever got to. Now the reason why I'm doing this is going to be my high of the day. Each time any 4-hour candle, remember, any 4-hour candle breaks above any of this region, is going to be more of buys for that week. Each time 4-hour candle breaks beneath it, is going to be more of sales for that week. Now when I mean break above or below, I mean a healthy 4-hour candle, like we see here. This one broke right below it, but this first one broke below it. You're not gonna like, this is on, I don't know why it's different here, but on TradingView I would recommend that you keep using TradingView. Do not use XNES or any of all these brokers to do this. TradingView, it's more accurate, because there are some candles that if it's on TradingView you see that there are differences now because of the time shifts and time change. But TradingView is more responsive, whereas XNES, they are still going to use their local time frame for that. Well, on TradingView, let me just show what I mean on TradingView. On TradingView, this is what you are going to see. The first two candles as regarding TradingView is this one. After this gap is this one and this one. You see how it is on TradingView. So this is what you should follow. That's why I recommend you use TradingView. So let me go back to the example. So if you see the candle that close above is this one, the original one that closed above. So hence it's going to be uptrend for the week. You should be buying for this week. So you notice when price get back to this point, you see how it reacted, it went back. So it also serves as demand and supply levels too. So let me just do one more example of the previous week for you. So the next one is last week. This is the first one, this is the second one. So I'll just have to like move this to the highest point you ever got to. That's the highest point you ever got to. Then this was the lowest point you ever got to. And again, I say you should keep on using TradingView. You can see how price kept it was consolidating for Mondays and Tuesday. Then when it finally made a way downward, it kept on trading to the downside. So there are times that it does not work 100%. There are times that it works and it works perfectly well. So let me just do one more example. Last one. This is the first candle. This is the second one. I will just edit this one, bring it to the low. Where this one, I'm gonna bring this one to the high I ever got to. See upon the breakout here, see it trended all through the way. So you can just go and do your back test, and that's what I do first thing. So that's that on that. Then the next thing I want to show you is how I put my psychological levels. As I said earlier, psychological levels are round up numbers that banks, hedges, they all pay attention to it. Now, current price of GBP USD as we're talking right now is 1.31224. Okay, so the nearest whole number to that will be 1.315. All right, so I may not get it accurately, so I will just want to edit it. Go to horizontal line properties and come to parameter. I will put that in manually 0315. All right, so I'll double click on it. Then the next one going up will be 320. 20. So like that. That's our psychological level. This I have 1.31000, 1.31500, 1.32, like that. I'll keep adding. The next one will be 1.325. The next one after 1.325 will be 1.3300, like that. That's how I keep adding psychological level. So once I'm done, what psychological level? Let me add more so I can use it to explain. What psychological level help me to achieve is it makes me to be able to determine, or I went to step. It makes me to be able to determine potential level point of reversals. So once I'm done with this one, the next thing I'm going to go to, I have to go to my 1 hour time frame to check what is currently the current trend. Remember, the major trend is determined from 4 hour time frame, while the current trend is determined from 1 hour time frame. So it's an uptrend, just as it has happened already. It's an uptrend, so I should be doing more buys. All right, so that's a very nice information. Whereas I go on my 15 minutes time frame to execute my entries on 15 minutes time frame. It does not just end at that. Before I go to 15 minutes time frame, what I would like to do is I want to pull out my trend lines all across. So let me show you that on TradingView. So TradingView have more details on this. The reason why I have to use TradingView this time is TradingView have history of where I dropped my trend lines before now. Right, you can see there was a trend line. This is on 4 hour time frame. There's a trend line here. Upon the breakout, you trade. Upon the bounce first, bounced up here, came here, bounced. Upon this bounce, I took this trade. This bounce again, I'm taking this trade. So it's still going up. Like the one I took 2 days ago, which is this right here. You can see this buy. It was because it came back to test this my high of the day. All right, came back to test this my high of the day, which is we already ascertained. This is the first candle, 4-hour candle. This is the second one. Upon the break, and it came to retest, then boom, that's a trade for me. Let me show you how it is on 15 minutes time frame. I believe you understand what I'm trying to say. So once you like look around all of these things, you will understand what I'm saying. Just back test it, try what I'm saying over and over again. Like this was how I caught this one, and it's about 123 pips that I caught here. This was the same style that I used, that I filmed it, and I dropped it in my last video. You can check my previous video before this one. That is how I caught this move, using the high and low of the day and using trend line. So it's just super simple. And before I have my entry, I have to come to 15 minutes to check candlestick pattern. It's very important. Candlestick pattern, it's either you see a bullish engulfing before you enter in for long, or you see a bearish engulfing before you're in short. You can see a double bottom and stuff, all of that. So with time, with practice, you just get to understand. And each pair has its own unique candlestick that work perfectly. For GBP USD, double top and double bottom work very well and most of the time. So those are the things that you have to really pay attention to. And bullish engulfing candle and bearish engulfing also work very fine too. So you have to really pay attention to all of those things. So that's that on my trading strategy. As I've said earlier, no strategy is a holy grail. So that is why we have to buckle and back it up with a proper risk management. So what I use in enforcing proper risk management is I use Baby Pips Forex position size calculator. You could also use my FS book position size calculator, but I just prefer the one of Baby Pips. The link is also going to be added in the description below. The rule number one on my risk management is I make sure I risk 0.5% per trade. And the second rule is I have maximum of 3 trades at a time. So I'm not allowed to open more than 3 trades at a time. Okay, that's the second rule. So the second rule now takes me to 3, the third one. First, that simply means since I only risk 0.5 per trade, then opening 3 trades simply expose my account to 1.5% at a time per trade, right? So now you would ask, why would I have to be splitting? Why don't I just open 0? Why don't I just risk 1.5% at a time? The reason why that is the entry that I may have at the beginning may be very risky. So I want price to come down a little for me to have another entry. So I want to break it up like 0.5. I'll enter 0.5. Then if it comes down again, I'm going to have 0.5 again. Come down again, I'm going to have 0.5. The reason why I'm doing that is I want to like limit my risk. The lower the stop loss level, the higher your lot size. Okay, so I determine that by using my position sizing calculator. So that's the reason why I have to break it into 3 and have 3 multiple entries. So that takes me to the third rule. I only add more trades only when the previous trade I had break even. For example, I have 3 trades running already. If I only have to add 1 more trade if I've successfully broken even one of those trades. I have to add 2 trades if I've successfully broken 2 of those trades. I'll add 3 more trades if I've successfully broken 3 of those trades. The idea is I have to protect the one I have to be running risk-free before I can add in more other positions. So that's why sometimes you see a lot of orders in my trade on my MetaTrader 4. Just know that the other ones that are lower are already at break even. All right. So, and the risk-reward ratio from me mustn't be lesser than 1 to 2. So I'm risking 1 to gain 2. Just example, I'm risking $50 to gain $100. So that's just an example of that. These are my risk management technique. Another thing you also see there as my risk management technique is I'm more concerned about what I am risking than what I'm to gain. For example, I'm more concerned now. The major strategy that I have to employ in my risk management is, first thing, once I come into the market, I want to protect my capital that I come in with into the market. For example, I'm trading an FTMO $100,000 account. I want to protect that $100,000, then making the 10,000, which is my monthly target. I protect the capital first. That's why FTMO would want to give me a free repeat each time I'm able to protect the capital at the end of the month. So capital protection is your number one priority in risk management technique. The next thing you're going to see, my lot sizing. I adjust stop to fit the risk, not to fit what I want to gain. To fit the risk, I want to adjust stop to make sure I'm risking 0.5% on that particular trade. I'll keep adjusting. So once the trade keeps going in my favor, I don't move stop. I don't widen my stop. Instead, I tighten it, keep tightening it, because I want to protect what I stand to risk. So that's a strategy that I also use there. I never leave trades overnight. You all know that FTMO frowns at that. Never leave trades overnight. Since I'm a day trader, I don't even intend to leave trade overnight because I probably will not even be able to sleep. I want to be able to sleep where I'm not having my mind somewhere else. Oh, my money is somewhere. I don't even know how it's doing. All right. So for swing traders, they can do that, but I don't know how they do it. But I'm a day trader. All right. So, and I use dollar cost averaging system to maximize my profit, and I break even once I'm in 15 pips profit. Dollar cost averaging system is a system that I've explained over time on my previous videos. That helped me to, like what I just explained earlier, breaking down what I want to, like breaking down 1.5% in 3 places, entering in 0.5, 0.5 as they keep coming down. Instead of, now imagine a situation where I've entered 1.5% at the top and trade keeps coming down. I'll be losing massively because the loss is going to be very huge on a $100,000 account. Now, our dollar cost averaging system allow me to split that into 3, enter with 0.5% first, and as it keep coming down, I keep entering with buying 0.5, 0.5. So when the trade finally reverses, I'll be at an advantage and I'm not losing much. That is the idea of dollar cost averaging system. So that's my risk management strategy. However, my money management strategy is very, very straightforward. When I'm in a losing trade, I close out the ones with bigger contract lot size, which is contract size first. For example, I'm in a losing trade, I enter the trade with 2.5 lots, and I enter the trade at the same entry point, and I enter the trade with 1 standard lot. The one I definitely want to close out, and they are going against me. The one I want to close out first is 2.5. The reason why that is if it's going against me 2.5, then I'm going to be losing for each pip movement. I'm going to be losing $25. If it's going in my favor, I'm going to be making $25 too. So I want to cut $25 as opposed to 1 standard lot, which gives me just $10 first. All right, I want to close out 2.5 standard lot. So that's the idea behind it, so I don't lose much. All right. So when I'm winning, the second rule is when I'm in a winning trade, I close the smaller lot first. I want to close the smaller lots first, just in case the trade keeps going in my favor. The bigger lots I keep accumulating more, just like inverse of what I said earlier. Keep accumulating more profit for me. All right. So I focus. The third rule is I focus more on equity and not account balance. Equity is the summation of what your floating account is plus your account balance. Okay, that's a way you could look at it, or you could say free margin. Equity could also mean free margin plus your margin. All right, you could look at it that way. So equity, you always have to look at your equity because it's your equity that eventually becomes your account balance. So you have to pay close attention to your equity. Now, this is a special money management for me that I always follow. It is a must, and I learned this from the book The Richest Man in Babylon. Pay yourself first. I always make sure I make withdrawal. I also want to advise you, always make sure you make withdrawal every week or every month, as the case may be. Whether or not you meet your target, just make withdrawal. Reset that account to the initial risk capital that you started with. All right, it makes sense that way. Just make withdrawal. Pay yourself first. It just helps your psychology. And now this now takes me to the next one, which is my trade psychology. First thing to know in psychology, my psychology strategy is I'm in competition with nobody. And I try as much as possible to set goals that are realistic, goals that I know that are achievable. You do not want to set a goal of $1 million when you know you only have $10,000 in your account. You are thinking, okay, I want to move this $10,000 to $1 million by the end of this month. That's unrealistic. It's possible with Forex, but it's so risky. You can lose your money in the long run. Okay, so you have to set goals that are very realistic. Okay, I want to make 10% of my account. I want to make 20% of my account this month. Stuff like that. Okay, I believe you get the whole gist. Humility. You have to be very humble. I've noticed when pride sets in, I lose more. And when I'm humble with my trades, I don't show off profit. I don't brag about my profit. I make more. All right. So, and zero emotions. Have no emotions regarding your losing trade. For example, there was a day that I was down by $10,000 in my account. I wasn't even looking at the amount of money. Converting that to my country's currency, that was going to be like very huge. That as at then it was 3.6 million, because then it was 360 for 360 naira to $1. So you doing that will just like kill your emotions. So just have zero emotions regarding the amount of money you're losing. Instead, look at it in terms of percentage. And that $10,000 to me then was just about 2% of my account. Just imagine. So looking at it as 2%, okay, I'm only down 2% of my account. And just mind you, later on the trade reversed in my favor, and I made 7,000 that day. Stuff like that. So it's just makes sense. And that was because I caught profit in time, because that was like a narrow escape for me. I was really happy that it came back in profit. All right. And the another psychology for me is, once I break any rule, I close trade for that day. I don't trade for that day until the next day. So FTMO have been able to help me shaping this. I've been able to discipline me in this regard. Once I'm losing trade that day, I just close out. I wait till the next day. All right. Another thing again is, when I have a winning trade, when a winning trade turns to a losing trade, what I do, I just close out. I do not panic. I do not regret my decision. I just close out for the day and wait till the next day. It really helps. And patience is a virtue. I cannot overemphasize this enough. Patience is a virtue. Make sure you discipline yourself to stick to all of these rules, stick to your strategies, stick to your risk management, most especially risk management. That's where people fail it out. Risk management, money management. If you don't stick to your money management, after sticking to your strategy and risk management, you may lose it all if you don't stick to your money management. And psychology is super. That's like 60% of the whole thing that I just explained, psychology. So you have to have your own work for you. And these are just basically my Forex strategy. All right. I believe you enjoyed this content. If you like this content, make sure you subscribe, turn on post notifications, share with friends and loved ones, and join our Forex community to be a part of the account flippings, to be a part of the latest news I'm going to be dropping. If you have questions, you can just drop it there. And there are a whole lot of things, materials in our Forex community. A lot of persons with great hearts sharing what they've learned over the years, courses that they've paid for, they sharing with one another for free. The knowledge that they've learned, they share with one another. You want to be a part of that community to get inspired, to get motivated to do greater and bigger things. So that's the idea of Fire Pips. All right, until the next episode, you guys remember to still and chill and while peeping. Keep cool, be great, guys.
Please show me